myself Vaibhav. As we are wrapping up the week, we are seeing that the euro has been one of the best performing currency for this week, and I think notwithstanding the exception of GBP or other minor currency which I might have overlooked, the euro has appreciated against most of its major peers, and fact that USD has been on the back foot has also helped the Euro USD. And as we are wrapping up the week and we see the Euro USD is positioning for the next week, we can fairly say that the Euro USD is on the firm ground. And I think in next couple of weeks, we might even see it inching towards 1.2 levels. If you consider the today's trading context, earlier in the day we got the Japan's inflation number, and here, as expected, the Japanese inflation has gone down, and now it is almost flat. But in terms of month on month, the Japan is experiencing deflation as its CPI is at minus 0.1%, and also we got the PMI numbers, and here both the manufacturing as well as the services sector are showing contraction. So that's a worrying sign for the Japanese economy. And it seems that the Japan's economy has not been really able to pull out of the recession, this contraction caused by the pandemic. And I think more efforts will be needed on the fiscal as well as the monetary side to pull the Japan's economy out of this doldrum and put it on the growth path. We also got the PMI numbers for the Australia, but we will not go into the details. But I would like to say that these are on the expansionary side. So Japanese, sorry, the Australian economy is doing comparatively better. Later in the day, during the European trading session, we got plenty of data, and here, apart from the PMI numbers for the major economies of Europe, we also got the retail sales numbers for the United Kingdom, and here, both in terms of year on year as well as in terms of month on month, there is substantial rise in the retail sales in the UK for the month of September. And in terms of year on year, the growth stands at 4.7%, whereas in terms of month on month, the growth is at 1.5%. And both these readings are higher than the expectation. Now, moving on to the PMI data, here we are seeing contradictory scenarios. While for most of the major economies, the manufacturing sector is still growing and it is in the expansion zone, the readings are mostly above 50, but the services sector are now again falling back in the contraction zone. And if you consider the Germany's economy, we have the services PMI at 48.9, and even for the Euro area as a whole, we have the services PMI at 46, whereas for manufacturing, the PMIs are in expansion zone. So that is a worrying sign, and as the coronavirus restrictions are coming back for most of these economies, we are seeing that the services sector are taking the hit and again falling back in the contractionary territory. For the US, we are scheduled to get the PMI numbers, but these are market composite PMI, and along with that, we will also be getting the services and manufacturing PMI. But these are not ISM numbers, so as is the customary practice for the US, we pay more attention to the ISM numbers compared to the market numbers. But still, the expectation is that we will be seeing the expansion for services as well as the manufacturing sector in the United States. Now let's turn our attention to the technical aspects. First, we will consider the technical analysis for Euro USD, and then we will move on to the USD Cad. Let's start with the Euro USD's technical outlook. This is the daily time frame chart for the Euro USD, and the Euro has been on the upswing, and in this week we saw it started firmly on the Monday, and it has been able to maintain that undertone for rest of the week. And even in today's session, after this yesterday's correction, we are seeing that the Euro USD is strongly placed for the upward rally, and in today's session, it has rallied almost more than 60 pips from the day's low, and it is looking like that the Euro USD will be closing the week on the high. So let's see how this goes. But if you consider the technical pattern as of now, we can clearly see that the Euro USD was in consolidation phase, and after contracting, after correcting toward this 50% Fibonacci level, it has again started to rally or towards its prior swing high, which was there around 1.2 level. So as the things stand, we can safely assume that it will be prudent and also profitable to stay on the buy side, that is continue to look for the long trades in the Euro USD, and we can adapt the buy on dip strategy moving forward for the Euro USD. So if we want to figure out the possible levels technically which are going to be important, then I think we can consider these pivot point series as well as the regression curve. And both of these factors were pointing to the promising setup closer to this central pivot point of these month's pivot point series, and the Euro USD made the reversal pretty close to that level. And here, if any of you had gone in for this trade anywhere close to 1.18, I think you might be sitting on decent amount of profit now. And as it looks like the Euro USD is likely to rally higher, and there is not much of a resistance inside. We have the first resistance at 1.195, that is almost 100 pips higher from the current level, and the regression curve also has now bent on the upside, so this is going to add one more confirming factor for the technical analysis of the Euro USD. So if we want to pinpoint the entry point for the Euro USD in coming sessions, then I think we will have to focus on this confluence around the 50 and 100 SMA. Here you can see that we saw this reversal happening fairly close to this 200 SMA, and as I said while explaining the 4-hourly chart, we also had the central pivot point around the same region. So we had these multiple support areas lined up closer to 1.18, and we have now the added confirmation of its upward bias as the Euro USD has been successfully holding on above the support zone and then again starting to rally higher. Now, if we want to get involved in the Euro USD, I think we will have to see how it plays out, and if it goes on to form the fresh swing high in today's session, then we should most probably wait for the next correction move, and then after due consolidation we can think about going for the fresh long positions. Otherwise, if you are looking for the intraday kind of opportunity, I think even now, as long as it is holding well above this 200 SMA, you can give it a try, but it should be purely from the intraday perspective. And given the fact that markets will be closing for the weekend, it would be prudent to get out of the trade before the closure of the US session. So that increases the risk. So apart from increased risk, I think there are not many factors which might force us to stay on the sideline. But prudence would be to sit on the sidelines and look for fresh opportunities after due consolidation, just like this prior correction and consolidation closer to 1.18 zone. And as long as this both the SMAs 50 and 100 SMAs are pointing upwards, pointing northwards, we can be hopeful, we can be confident of going in for the fresh trade. And I think now for the next trade, we can utilize this 200 SMA as our stop loss Anything below that can be kept as a stop loss for our trade positioning, and with that we can target on the higher side even the levels close to 1.19 or even beyond that, as there is not much of a significant resistance in the upside below 1.195. Now moving on to the USD CAD, here also the theme is almost the same. We are expecting the weakness to persist in the USD, and as a result of that CAD is likely to appreciate against the USD. This downward spiral for the USD CAD is continuing, and here after this pullback for which lasted for most of the September, we are back to the downward bearish momentum, and the USD CAD has been declining for most part of this week. The range has been fairly narrow and its ATR also has gone down, but still we have good opportunities to go for the fresh positions, and I think after this long consolidation phase we might indeed see the fresh break below 1.31 levels, and that might open up the possibility of USD CAD dipping towards 1.3 in coming days or coming weeks. So looking at that possibility, I think we have to see where are the opportune moments to get involved for the short sell trade in the USD CAD, and to that end we will have to figure out the crucial technical levels which can be then utilized for our purpose of finding the optimum entry and exit points. Here the pivot point series is pointing to the continued downward pressure in the USD CAD, and also the regression curve is sharply bent on the lower side. So both of these are pointing to the possible move on the lower side around 1.310, or even beyond that. We had this swing low being formed at 1.308, and given the formation has been of the lower high, we can safely assume that it won't be wrong on our part to expect the formation of lower low in next couple of sessions. So our target in immediate case can be kept just little lower than this prior swing low, which is there around 1.308. We have the first support of this month's pivot point series coming into play around 1.307. So we will need to be cautious also, and we will have to try to minimize our losses in case we happen to be wrong. And if we consider this lower time frame chart of hourly, we have this excellent opportunity to go for the fresh trade as long as the USD CAD is hovering below this 200 SMA. I would say that any opportunity in the price band around 1.314 to 1.315 can be utilized, can be exploited to go for the fresh trades. That is almost 20 to 30 pips higher from the current side, and we will need some appreciation to happen in the USD so that we will get the correction, and that might push the USD CAD bit higher. And right now the risk reward ratio is not going to be that promising. Even if we go to the trade, set up the current price straight away, then we will not really be getting the sharp stop loss, as we will need to keep our stop loss little above the immediate swing high, which is there around 1.318, and as I said, the entry can be anywhere in the vicinity of 1.314 to 1.315. That will entail the risk of around 30 to 40 pips, and to get the risk reward ratio of at least 1 is to 2, we will have to target the lower side, the first support of this month's pivot point series, which is there around 1.307. So there will be our 70 pips target, and that will give us the decent risk reward ratio. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument and one should be careful while using the information provided. Have a fabulous day ahead and the weekend. Goodbye.